Welcome back to the FX Blueprint. This is the brief. If you were here last time, we were looking at EU versus the dollar, and in front of you, you see a day chart. And I just want to draw your focus onto this section right here because there's a huge consolidation. So, every trader, if you see this video today or tomorrow, this consolidation will be going on. Okay? Last time, if you were here, you recall we said EU was in a bullish trend. It's going up. As you can see, there's obviously Elliott wave levels, but I'm just going to be quick. This is a quick video to update you on what's going on and what's happened since we last worked on this together. So I'm just going to go down time frame by time frame and look at the structure and look at the price action, see what our Elliott wave is telling us, and then obviously we'll see what our candlesticks look like. So this is EU, how it looks like in a day. I could put it in a week and then you can have a look, but it's a little clustered because of my labels. So I'm going to go back to a day. It's very simple. You can clearly see it's roaming around 1.1773 or 1.17963. If I go to 4 hours so we can look at the market structure, or perhaps let me just walk you through what we have over here. So we've got the market coming from down here, retracement of 61.8 from this leg right here. I'm just going to zoom it in here so everybody can clearly see what's going on. We've got the market coming from down here, which was a 61.8 retracement of this first leg here. It went up all the way to give us a high, and the price of that high is 1.2083. And from there, it descended down to a low of about 1.7657. And it's since been consolidated in that region. Hence why you see my very strong support level. This was obviously previously a resistance. It got tested a few times and then eventually got broken. And now has been turned into a support level. All right, I'm going to go ahead and zoom in and look at 4 hours here so we can be able to see how the market structure looks like and what the price action tells us. Obviously, we've established there's a huge consolidation. You can see there's a bunch of candlesticks, bunch of small candlesticks that look like dojis. The market hasn't moved beyond the rectangle that you see over here. I'm going to go ahead and go to 4 hours and then just try and zoom it out. Obviously, as you can see, we had a higher high, and then obviously we got a higher low, and then established a higher high, and then a higher low. And the price has since returned to this point. It has not broken below it, right? It has not broken below it. All these are just fake breakouts for the market, right? Fake breakouts. If you're looking to sell, you would have lost a lot of money in this region, you know. So what I try to do is create what I call a PRZ, these potential retracement zones, as you can see in the pink box over here. Now, if we look at the market structure in 4 hours of EU, again, this is a live market. We're always trading on a live market. We already have a teaser. The teaser right here, I just put in the middle so that if it starts making profit, I'll put my other orders over here, and then we'll get triggered. Sorry, give me a second. But yeah, so the market comes from down here. Established wave 1, as you can see labeled in the blue, which is also a higher high, also a truncated top in this region, goes down to this support line over here, indicated 1.5, bounces on it, which establishes a high low, and then goes all the way to break our resistance slash turned into support level. From there, it breaks, goes all the way up, and then comes back down to respect what? To respect the market structure. Bounces on the support level, which was before a resistance, and then wiggles all the way up here to 1.19, establishing a very, very strong point. As you can see, there's a bunch of dojis over here, and that's 1.19, which becomes a new resistance. And then the market trickles down to go back to the original support line. So what we're going to do is grab a Fibonacci over here, take it from the lowest point that we see in the market, which is this one. Well, the last swing, the last retracement low, basically, right? So we grab it from the last retracement, which is this one of wave 2, which is where our higher low is. Grab it, go all the way. We realize it sits right at 61.8. Now I'm going to do wick to wick, so our data is a little more accurate. Now if I capture all the price, you can clearly see 61.8 falls on this region. So all I'm going to do is grab this little rectangle, and I'm just going to put a whole block line over here to signal you that, hey, you're not, okay, let's make it, we'll call this the invalidation line. Once we move the Fibonacci, it'll be a lot more clear. And then I'm going to grab the price and put it right here, and I'm going to enlarge this so you guys can have a look. If I enlarge this visualization, it's going to be that big. Now you can clearly see what the price is at this point. We're just going to move it slightly a little bigger, okay? Here's the price, which is closer to the current price right now, 1.1752. All right, let me do this. I'm going to put the price. I want you guys to be able to see it. We'll put it right here. Right here, where we mark our invalidation line, which is now 1. That's where 61.8 is, obviously. If I put a label and say 61.8 retracement, I'm just going to say rack. I'm just going to say R 61.8%. 61% retracement, and then I'm going to say invalidation. What does that mean? If the price gets below that point, the trade is invalid. Okay? 12 is good. We'll make that red. I'm sure you guys can be able to see. 61.8 invalidation. Now you can wiggle your price between where I've put it, like 1.1752. I mean 57. Anywhere within a range of 10 pips of that price should be great. So for example, if I grab my small buy over here and grab it, go all the way down, you'll realize that my stop loss from the position where I bought is about 50 pips away. So if this trade makes a loss, it's going to lose me $5. But the great thing is, I know if that is invalidated, I know the market is now what? Going another direction. So essentially what I'm trying to say is, we have enough evidence to tell us, hey, this market is bullish. This market is on a bullish trend. This market is sitting on 61.8. This market is sitting at a support level. This market is giving us dojis. This market is sitting at what? A simple ABCD retracement. Okay, we're going to go through that here in a little bit when I'm talking about Elliott, okay? Give me 1 second. But what we're trying to say is, okay, the price from here can either go down from here, because we're respecting price action, right? The price can either go down from here, or the price can go up from here, right? So two options, right? And so our evidence is obviously supporting the bullish The bullish momentum, all right? If you were to put a trade, I would suggest, let me grab my price over here so I can mark the box. This price is marking the box right here. And what we're essentially saying, if the price crosses 1.8278, the market is what is going up. You can confirm. Obviously, we'll look at the market structure and see, okay, has it broken the resistance of the rectangle, and has it then tested the resistance of the what? Of the rectangle, so we don't have a fake out like over here. So you have, if the price breaks below 1.7655, you know, okay, the bullish trade is now invalid. If the price breaks above 1.826, you know your trade is what? Your trade is now valid. You can enter your bullish trade. And essentially what you're supposed to do really is, if you're on a laptop or a phone, just go to trading and then say buy stop. Okay, if you put your buy stop over here, it will get triggered. And you know from here, like if I grab the if I grab the trade that I currently have over here, 0.01, I'm losing a leverage of 1 to 1,000. So 0.01 means each pip is 10 cents. So 10 cents a pip, I would obviously take my first profit over here, right here at $12 at 120 pips, and then my second take profit would be right here at 231 pips. So I'm just going to extend my take profit over here all the way to the top so you guys can see. And then I'm just going to label this region right here and say first TP. First TP. We'll call this first TP. Market red, and then we'll put it right here. First TP is right here, and the price over here for the first take profit is like 1.19, and that's about. So if you enter the trade once it breaks, that's about 120 pips, easy, an easy 120 pips. Now let's move on to the next segment of our video, which is Elliott wave. So Elliott wave analysis. Why is Elliott wave telling us this is gonna be a bullish trade, or it's a bullish trend? Obviously, if you go back in the day, well, now there's a cluster of labels. I'm gonna go back again. I'm gonna remove this. If you didn't catch it, just go back in the video, and you'll be able to get the price. So I'm gonna change this to something smaller so it's not in the way, and I'm gonna move these two over here, and then I'll do the same thing with the other one and then change it to be smaller. Oh, I keep doing the same thing, don't I? Okay, here we go. Now Elliott wave. So we've established a few things, right? We've said, okay, our market is at a support level. We've said our market is at a support level. Okay, good. And then we've established our market has retraced from a higher high to establish a higher low. Excellent. Now, can we have a confluence of Fibonacci's? Yes, that's very possible. So if I grab my Fibonacci to here, we already know that's 61.8. I grab another starting point from there, and that confluence would be about what? About 50. As you can see, 50 and 61.8 fall where? Fall right inside our rectangle. That 50 zone and 61.8 falls right in our rectangle. And then, so because we established that this was wave 1, this was wave 2, 61.8, that's 61.8. And then this, and then he had established a new wave 1. Remember in our last video, we were talking about wave extensions. So Elliott wave, sometimes you have wave 1 and then wave 2 and then wave 3, and then in wave 3 you find there's an extension. But sometimes you can have an extension in wave 1, which means before you complete, for example, over here we've got 1 and then we've got 2, and before it completes wave 3, as Elliott wave rules say, wave 3 is never the shortest wave, right? It's never the shortest. It can either be the longest, but it's never the shortest. And usually it extends at least 1.68 times of what wave 1 is. Okay? It extends 1.618 times of what wave 1. Those are just basically golden ratios. And so the market established a new wave 1 and then gave us another wave 2, another wave 2 over here. If we have to move our labels, we'll move our labels a little bit, because now this retracement, if I zoom it in a little bit, will now be we'll have it in red. I think red is a good color. We'll have it in blue. Perhaps you guys can see this. I'll extend it a little bit so it's like at least 14. So we have A, and then we have B, which is just a simple zigzag retracement. And then we have our wave C. So what does this mean? A B, C is within wave what? Wave 2. The wave 2 of what? Of pink. Right? Wave 2 of pink is within what? Wave 3, which is currently being constructed of what? Of wave what? Of the blue. Wave 3 of the blue. All right. So first take profit is right here. And then second take profit obviously would be right here. So 80 wave obviously tells us, okay, our correction might be done. So what you want to do now is get inside the small rectangle. Okay, get inside the rectangle over here so we can understand what's going on here. Why is this rectangle extended all the way there? So you can highlight to see that this resistance of the rectangle is valid. The market has stopped and it respects that position. Okay, we could have easily grabbed the rectangle and highlighted this region here. Tells us the same thing, but when you extend it, now you see a full picture of the rectangle being respected as the market moves along. Our candlestick structure. So now moving along into an hour, so we can exactly see what's going on within an hour. Here's how the market looks like. Okay, I'm gonna go ahead and put a line graph, which is one of my favorite things, so you can bear with me. I'll grab a crosshair. Pay attention to the crosshair. Within C, here's what's going on. The market touched down here twice, which some would call a simple double bottom, okay? From there, it broke. From there, it bounced back up, broke this level of what? 1.768. Established that level as the new support level. After it broke this region, right? Broke the resistance all the way and established this position as a new support level. Played around that support level, and that's what it's been doing 1, 2, 3, 4, 5 times. And now the market is deciding, you know what, perhaps it's time to go up. Yeah, but all of that has happened and the market has not yet gotten below this point, right? Since all of this has happened. So if I take a line, this is 1 hour. Draw my line right here, right? This will indicate to me that if the market crosses this line over here, that would mean the market is obviously changing direction, or it's continuing with its downtrend within the corrective pattern. Put it back. Here's how this looks like. It's almost like it's being ushered out. What do we call this? The highs. What you're gonna see is the lows are getting higher, but the highs are staying the same, right? The lows are getting higher, but the highs are almost staying the same, signaling you that it's going to be squeezed all the way to the top. Now, to further validate or for further confirmation, you could put in an exponentially moving average. I like those. That's about the only indicator I tend to use. Let me grab my line here, my trend line, do this. And then I want to make sure it stays visible only in an hour. 30 minutes on the other smaller time frames. Right? This is still 1 hour. Let's do 30 minutes. See how 30 minutes looks like. 30 minutes is telling us what? The same thing. Okay? All we're waiting for is for the market, for the buyers, to push this market all the way up so that it can break these previous highs here. Yeah, we need these previous highs over here broken, and that will confirm to us that, hey, you know what? This market is actually going up. Yeah, there's 30 minutes, there's 15 minutes. If I zoom it out, it relays the same message. Okay, it relays the same message. Go back to 4 hours, and then we zoom it in. And then we're gonna finish up the labels over here where we say this is the second take profit. How are those determined? We've determined the take profits using our horizontal lines, right? It doesn't mean the market is not going to respect or bounce on the horizontal or the resistance lines. Let me just go back to that here in a minute. So I'm going to change this back to 12 and I'm going to make it red. Yeah. Second take profit over here by 1.2 flat. Yeah. So our horizontal will tell us about first take profit is right here. We marked it. Second take profit is right here. We marked it. And we're using strictly what? Our horizontals. Now, we can grab a Fibonacci to see how far the market is going to go with an extension. we already know that if I go back a little bit to another different starting point, I'm going to zoom out to a different starting point. So there are two starting points. I'm just going to highlight them with the rectangle. There's this region right here. That's one. And then there's this region, which is two, which we use to try and determine where the market is going to go. Yeah, we use the Fibonacci retracement to try and gather the retracements. And now we're going to use the Fibonacci extension to try and see where it ends. So if I grab my fib from, and I'm just going to look at wave one. So we're going to grab the top of wave one, go to the bottom. You can clearly see our second take profit hits 161.8. Our first take profit is around the region of 141.2. Okay, so this is gonna get broken. Okay, this resistance, it's hit at B and it's also hit at X by a wick. Now again, we can grab the same Fibonacci to try and see the same thing. Grab my Fibonacci, go from price to price, put it at the bottom, and I already know, all right, it has to at least cover 100%, so it's gonna get to what? To first take profit one, and first take profit what? And the second take profit. All right, that'll be it for today. We'll catch you guys next time. Please trade safe and enjoy yourself. Stay blessed.